Hello guys, welcome to my channel again. In this video, we are going to do a weekly breakdown as we used to do. So, and the few pairs we'll be looking at, we start from DXY because it has a lot of impact on the way the other pairs, major pairs moved. So this is DXY. In order to not waste much time, this is the DSY, and this we are starting from monthly time frame, and you guys understand my concept, the way I trade. So and the process will be repeated on monthly, is going to be repeated on daily, is going to be repeated to the lowest time frame that you execute your trade. So and I can say that this is one of the simplest channel. This is one of the channel you can see the simplest breakdown in terms of SMC. So the way I structure this whole thing is to make it easy for anybody to understand. You can watch my video and understand my thought process. So, and I make sure that it's not complicated. So let's dive into it. You can see in order to understand the directional bias, you can see that we need change of character, we need break of structure and all those things. So, and look at DXY for a very long time. DXY has been trying to go bullish, has been bullish. So, for a very long time. So, and how do we confirm this bullish momentum? As I said, you can see that we had break of structure here and inducement taken out and broke below here. And you can see that we're expecting this side to be protected. Unfortunately, it does not. So, market broke up. That's when we confirm the buy momentum in this monthly time frame. And you can see the process remained the same. Market creates high here and came back for this low and break above this. And if we are looking at this, you will say you'll be looking at this the low that the market took out. Yes, but when it broke up, it do not create any low. So that's why this is the lowest level. And you can see market broke up again. So we can consider this as change of character, and we're expecting the market to come down, but it broke up, so it gives us another change of character to the upside. And after we had this impulse move to the upside, what are we supposed to look for? Look for our inducement, which is here, the value pullback that the market did last. And this is our decisional POI. Why? Because it has fair value gap. And this is our extreme. Why? Because it also has fair value gap. So these are the criteria of how we choose our POIs. And you can see market is actually responding to decisional POI. So in order to know whether this POI have potential of holding, we can easily go to daily time frame and see what the daily time frame is also doing. And if the daily time frame is also giving us change of character, then it will be a good sign for us to know that okay, that POI is likely going to hold. So and you can look at it, this was the last level that the market took out. So, and this was the high that we're expecting the market to protect. And you can see market went there, sweep this high, which is also normal. Market did external liquidity sweep and closed below. And you can see we had a break of structure here. This was the last break of structure that the market created and did what? And then market closed above here. So in daily time frame, we've already had change of character supporting the higher time frame POI. So you can see market has closed above this level. Market has closed above this level. And what are we supposed to look out for? We are supposed to look out for our daily inducements. You can see this was the last pullback that the daily did, and we are supposed to do what? We are supposed to look for our POIs. And this was the only POI that is valid. This one has been mitigated. You can see it has been mitigated. And what makes this valid? Because it has fair value gap. And in terms of order flow, it's also valid. It's also a valid order flow. And as I said, if you don't understand what order flow means, you can watch the order flow video on my channel. You can see I've explained it. This is the order flow. This is the last selling momentum before this move. But the order block is the refinement of the order flow. So we are refining it to order block. So and you can see we're expecting the market to come here in terms of daily structure. But if we also go to what the 4 hours is doing, we can see that maybe we have trade opportunity, and trade in that same direction. And you can look at what the 4 hours is doing. You can see that market did 4 hours break of structure here. Market did 4 hours break of structure here. This level, 4 hours break of structure here. This low must be protected. And what does market do? Market did um market this serves as our inducement, decisional POI, and you can see market mitigate extreme POI and market break up. So that's where we had that's what makes us to have break of structure here in terms of 4 hours. And what is happening again? Market creates inducement and came back for this extreme POI. And if you look at it, this was the extreme POI that market left behind, and you can see how market was responding from that level. But from daily time frame, we are expecting the market to come to this level. But if our market responded to this 4 hours time frame, it means that after we had this break, if we have break of structure again to this level, then this low will now serve as our daily time frame inducement. So that's just it for this video, for this pair. And if we go to 24 hours again to see 24 hours again to see what is likely going to happen if we break up. You can see that if we break up, then it means that market generates another daily inducement. So this level will serve as our inducement, and probably this level will serve as our POI that we'll be expecting in case if the market flash down, then this is where we'll be expecting to continue buying momentum in terms of daily. So that's it for this. The next pair we're going to is Euro USD. So Euro USD is the opposite of um, DXY. As you all know, if the Euro USD is buying if the DXY is selling Euro USD, will be buying, and if the Euro USD is buying, DXY will be selling. And you can see the structure. Even if you flip the structure, you will see that it's still almost the same thing. So you can see this was in terms of monthly time frame. So you can see that this was the last break of structure that we had. Our market, we were able to figure out our inducement here because this was the last pullback that the market did when it comes to monthly time frame. This was the last pullback. If you don't understand how I pick my valid pullback, you can watch my video. And this was the last pullback that the market did. And what next are we expecting? Market to come back and take this last pullback. And as you can see, market came back for this last pullback. And this is our extreme POI because we are expecting this side to be protected. And you can see market has already mitigated our extreme POI in terms of monthly. So what next are we supposed to do? Just go to daily time frame straight and go and see what daily time frame is doing. And you can see after this higher time frame mitigation, you can see that we have already had change of character here. And that means daily is also confirming that that level is likely going to hold in terms of monthly time frame. So, and you see, we confirm our inducement in terms of daily, and this will rest as our decisional PO. This rest as our only POI. So if you have two POIs, the first one will be decisional, while the first one will be 50-50, which we call decisional, while the last one will be extreme. But in case you have just one POI, then that one POI is likely to be the high probability POI, irrespective of where it falls. So and we are expecting markets to go and take out that inducement, but you can see the momentum is kind of weak. So it means that seller is already present in the market. So the scenario that is likely to happen is when markets flush down, then this level will serve as our liquidity point, and we'll be expecting market to come down here and do its thing. So, and if market push up, I'll be looking for sell again from this level to this level and continue the process. And if market do its thing like this and still drop, then we'll shift our inducement to this level until market take it out and come. So we'll now know that we have a complete structure here. So that's it for Euro USD. We can go to GDP USD. GBP USD. So you can see GBP USD is also similar to Euro USD, but for people that like trading, that like to compare, to use what do they call it? I forgot the name. So people that compare the charts to each other, they trade them based on what one is doing, and this is going to be a trap for you because although the correlation can be close, but it's not 100%. So if one is moving, one might not move, and it means that if you are using the sentiment of the first, maybe Euro USD to trade GDP USD, you can also that is likely to land you in trouble. So you trade them as individual pair. The setup is a unique setup. There is nothing to compare it with. So treat them as they are. Don't look at them in terms of comparison. So for me, I don't really care what DXY is doing. I just look at the chart and trade whatever the chart is telling me. So, and as you can see in GDP USD, you can see that we had break of structure. I've explained this chart multiple times, but you can see we had break of structure here, and market creates inducement in this level. It's very, very obvious that this was our last pullback. So market created inducement, and this was the only POI that is left unmitigated. And you see first attempt market mitigate it and push back, clear more liquidity. Then look at what the market is doing. Market is kind of forming what we call double top here, and probably market want to drop, but this high must be protected. The highest thing that can happen is either market change character or market sweep this high, and then we see the proper collapse. But as it is, 1 hour daily will tell us exactly what is happening in this level, and if we have daily change of character, then that will be the first sign that we are likely to start selling. And look at it. If this level hold and you are selling to this level, this can take a very long time, maybe a year or few months or multiple, and it can be fast. Like this one, you can see the way market drop. So this is 3,000 pips. So if you can project 3,000 pips to the future and you trade towards it, then that's going to be so. If you go to your lower time frame, you just know that for the rest of this year, for me, for the rest of this year, if I can confirm change of character here, no matter what this pair is doing, sell is going to be my high probability trade. So I will just be shorting this pair till we add break of structure here throughout this year if this daily time frame is confirmed. So the same thing with euro, but I don't really trade euro USD. I trade GBP USD. So And as you can see, we can drop down to daily time frame to go and see what the daily is doing. And it's very obvious that daily time frame is giving us what? Break of structure to the upside or change of character. This is supposed to be our last level that must be protected, but we have change of character here. And it's very, very possible when market is grabbing liquidity, we can have double change of character. And you can see market grab liquidity below here, grab liquidity below here. But all the drama is happening where it's happening here. So that's what will make us to be careful. So when I see that we have change of character to this upside, what I do next is to mark my inducement and mark my POIs. And this was the only POI that was available, that was valid. So when I was marking it, so it means that if this POI fail, market is likely going to target this low, either by close below it by Avibor or by giving a sweep of this low. So if you close below it, we have change of character, and if you sweep it, then that might be maybe buy momentum want to kick in temporarily off to come and break the structure to the upside. So, but whichever way the market is doing, then we trade towards that direction. You can see, and when market was here, kind of here, I knew this is the next target market is coming to, and the second target is this, and this is going to be the week low. So what I did was to go to the 4 hours, go to 4 hours and trade towards this direction. So when they say trade in the direction of the higher time frame, it doesn't mean you can't trade. You just need to know where the higher time frame is currently going. So that's just it. Once you know that higher time frame is doing pullback and is targeting inducement, you can go to lower time frame and trade towards that direction. Not that you wait for higher time frame that can take months before you get to that level. So all I did was to go to 4 hours, and I knew that this can be weak, this can be weak, and the major low can be weak. So based on my experience, and immediately market mitigate this level, break below here, we had break of structure. I waited for inducement and allow the market to take out inducement, take a trade from this level, and you know, I think I explained it in my previous video and so on. So and we target here I only target 1 to 3. The same process apply, break of structure to this level, and this level will serve as our inducement in 4 hours, and then this level will serve as our decisional POI, which I explained in my previous video. But because I had the understanding that this level must be protected if this level is going to fail. So all I do is to go to my Fibonacci and do what? And look for my 75% pullback. Fibonacci from this level to this level and drag it to this level, then trade at my 75% pullback. It took time and the market play the trade plays out, and we had 1 to 2.5 on this trade. So it's not that difficult and the process remained the same. So and you can see market closed below and gave us break of structure. So what am I positioning for on GDP USD? First thing is to mark my inducement, which is here. And I look at this, I see that this is supposed to be my high that will be protected. And I look around, I couldn't find both hidden POIs. Okay, I found hidden POIs here. I was able to find hidden POIs here, somewhere here, because the previous candle was taken out, but there's no decisional POI and so on. So I waited, I laid ambush here, trap here, set my limit order here, and expecting the market to come to this level, and I will do the same thing I've been doing. So in this case, maybe I'll get 1 to 3. So this is the current situation. But in this scenario, if we had a break of structure to this downside, because it's going to be valid while inducement has been taken out, it means this is going to be our high. And by that, maybe this level will serve as our inducement because it's a valid pullback. And by that time, maybe I can sell from this level again. So to continue the sell momentum to this level. So once we had, if we have daily change of character, then I will now reposition for whatever the daily want to do. But as it is, I'm only looking at what 4 hours is going to do in the direction of higher time frame. So that's it for this pair, GDP USD. This is the current situation on GDP USD. So what other pair are we looking at? We can look at AUD USD. AUD USD, we can look at it and see what the market is doing on AUD USD. I did analysis or so the last time, and the chart remained the same. You can see on AUD USD, I noticed that we are more clear on weekly time frame than monthly. So, and as you can see, it's very simple. We don't need to look too far. You can see this weekly has been trending towards to the downside for a very long time. You can see the structure is also complete. High taken out, this high is taken out, the market break below here, market take out inducement, then break below and so on. So it's very obvious that weekly time frame is what is clear enough for me. So that's how I do it. If I go to monthly, if it's a bit confusing, I go to week, or if I go to daily is confusing, I go to weekly. If weekly is confusing, I go to monthly. But if weekly is clear enough and I can see what the last structure that the market created, maybe it respected weekly structure, then there's tendency that the market is actually respecting weekly time frame. But if it doesn't respect weekly structure and is respecting monthly structure, then there is tendency that I work with monthly time frame. So that's how I look at it. I don't force trade and so on. And as you can see, this was the obvious last break of structure in terms of weekly. This was just a liquidity created ranging for a very long time. A lot of people is going to lose their money here. So, and as you can see, break of structure, market created last pullback here, which serve as our inducements after break of structure in terms of weekly, and it's expected that market must go back to go and take it. And this was the only other block that was available. This was the only other block. And as I explained, if this other block fail, doesn't mean that this high is not going to be protected. But for extra confirmation, market is likely coming for external liquidity sweep. Market is likely going to sweep this high. Or market respected this hidden POI, but the sweep of the high is kind of high probability. So you can see market swept this high already. We had a swept of this high, and then market rejected. Look at what the market did. You see, we had this candle rejection, and followed by bearish momentum and bearish momentum. So in weekly, we are already seeing that market is kind of bearish. And what are we supposed to do? We can easily go to 4-hour time frame directly. There's no need to go to daily because we are dealing with weekly. So what we want to see is to see whether 4 hours is also supporting what the daily is doing. And you can look at this. After this, we had this sweep of this high in higher time frame. Then market responded to this, market responded to this low. Fair value gap responded to, and you can see, so this was the last 4 hours break of structure that the market did. While inducement taking out, decisional POI failed, then extreme hold, and you can see we had break of structure to the upside. And after that, we're expecting this low to be protected. Inducement here, we're expecting this low to be protected. But based on my experience, we are trading in higher time frame POI. So I was patient watching this level, and I knew that it's likely going to be a weak low. And you can see it's very clear. First attempt market swept it, and second attempt market collapsed. So it means that we are ranging. Let's find our range now. We have change of character in this place. So where is our range? Now, this is where a lot of people get it wrong. These are internal structure. These are internal move, impulse correction. So, and remember, for us to invalidate this structure, this is the level. This change of character is what invalidate this loss structure. And assuming that this level, maybe market push down and now continue, then this level will be our break of structure. But as it is, it means that was the last high that the market created. So it means that immediately we have change of character. Our low is going to be change of character here, and this high is where it's supposed to be. This high is where we are expecting the market to respect and to protect. Now, but you can see market do not take any inducement. Market was just collapsing. So our job is to look out for the last pullback that the market did in 4 hours, and you can see it's very obvious. We had the last pullback here. According to this chart, we had the last pullback here. So, and immediately we had that last pullback. What are we supposed to look out for? Look out for the next other block that is resting up above this inducement. This was the first order block that is valid, that we can say it has fair value gap and is resting here. And we look above here. Let's see if we can find anyone above. You can see this one mitigated by this one has been mitigated by this move. This one has been mitigated by this move. You can see mitigation happened, and then this one also mitigation happened by this move. Then this was the entire buying candle. Mitigation has already happened by this move. And you can see there is every other candle has been mitigated. No candle with fair value gap, and no candle with valid pullback. So this kind of be like the order flow that hasn't been mitigated. And you can see if we were to refine the order flow, we have to look for the other block that is valid inside the order flow. And you can see that this is the only other block. I had a trade here running on this pair. I had a trade here running. Maybe I'll get 1 to 2 or 1 to 2.5 first. But I'm very, very kind of confident that if this level fail, the market I can re-enter based on 75% pullback, or allows another structure to form. So this was the trade I had on this. You can look at it. I had this trade running on this. You can see this was the trade I had. So I'm already in positive region. So that's it for AUD USD. The other pair we can look out for is, I know a lot of people trade gold a lot, but let's see XAUUSD. XAUUSD. So you can see I had some kind of markup on XAUUSD, but I would like to probably do it afresh and see what XAU. Let's use another another chart. Okay, I have the markup already here, but let's do it afresh in order to just avoid confusion. You can see XAUUSD has been trending. If you want to go to weekly, you can see that we don't really have clear, obvious structure here. Market is just pushing up. So you can see, go to the daily time frame and see what the market was doing. So if you were to look at it, you can see that this was the last obvious break of structure that we can point out. And how do we confirm this break of structure? It's very simple. You can see inducement swept, probably mitigation of this other block, and you see market flash up. So if you are looking at this in daily time frame, you can go to 1 hour or 4 hours or your lower time frame and trade towards this direction, because higher time frame has confirmed that this is where the market is going. And the same thing happens there. We have sweep of this low. If you look at it, I think this low is no, this is not the low, it's not valid. So it means that there's no break of structure there. So now market keep pushing up, and our job is to look for the last pullback that the market did. It was obvious that this was the last pullback that the market did. After that last pullback, we are expecting this was the low that must be protected, and we're expecting market to do what? Market to mitigate this other block. And you can see market traded around this other block, mitigates the fair value, the other block and the fair value gap, and there was a rejection to the upside in terms of daily. So this is the highest level that the market has created. Then this is the lowest in terms of daily structure based on how I trade. So and you understand that the trading is all about perspective. So it's not about what other people think, it's what I think about the market. So this is what I have in terms of daily time frame. So and let's see if we have a stream order block in this place. I'm looking at it. This is the first order block, order flow is not available. We don't have order block here, and probably this order flow is not has been mitigated, so we can't deal with this other flow. So we can deal with the other block here. I can see other block here. So I think the market has already traded into extreme order block. You can see first attempt. If we go to lower time frame, maybe we see buy momentum in 1 hour or 4 hours. But market failed. I think I did an analysis on this before. So that this is the less level that the market is likely going to come. So if this low is going to be protected, which look like weak to me. Why? Because you can see market has been trending for ages, for a very long time. So market need to rest or consolidate. So I'm seeing DXY giving us bullish and strong momentum, then expect gold can start having a decline in its buying momentum. So, but nevertheless, we do what the market says. So what are we going to do starting from here? We can scale down to 1 hour time frame. We are going to see a clear chart or a clear momentum to the upside. So in 1 hour, the moment market mitigate higher time frame POI, we need to look for the last 1 hour pullback that is valid. That's where we confirm our change of character. And if you look at it, I think this is the last valid 1 hour time frame that we can work with. And immediately market change below here, we can confirm the change of character, not because the structure has changed, but because market has mitigated the higher time frame POI. So the level that this level is supposed to serve as our inducement, but because we are responding to this higher time frame, we can use it as our change of character. So, but nevertheless, you still have to be careful because this is our trading range, this is the low, and you can see this will serve as our high. Why is this high? Because we are now shifting from bearish momentum to the bullish momentum, and we can look for inducement. And the moment market take out inducement, close below or sweep inducement that high, this high is confirmed. And after that, what are we supposed to look out for? So this is our high, then this is our low. What are we supposed to look out for? We look out for our POIs. So this is the first POI that the market traded into, which serve as our 50-50 POI. We don't need anything here. We just need to come down and see if we have valid POI. And you can see this was the only valid POI, but what? It has been mitigated by this move. So, and we shift to the upside, no POI, no POI. You can see no POI, no POI, no POI. So this is the only okay, I can find a POI here, which is also valid. So it has kind of small imbalance in between. So, and it's a valid pullback. So this level can be a POI. If you want to know how, you can see, let's even make it simple. This is going to be the order flow. You can see that this order flow has been mitigated by this move. So, and this is going to be another order flow. And you can see these are the major order flow. It's also close above here and mitigated. So you can see it has been mitigated by this move, by the valid pullback. But internally, let's deal with the order flow. You can see this was the order flow. It has been mitigated. This was the major order flow. It has been mitigated. You can see In this video, we're not supposed to be talking about this. And you can see this is another order flow. It has also been mitigated. All order flow has been mitigated. This was the order flow. It has been mitigated. You can see. So this was the order flow. Order flow is also a POI. It has been mitigated. You can see this was also order flow. So order block is a refinement of order flow, as I used to explain. So if order flow is valid, it's also a POI. And you can see this order flow is unmitigated. And this is what the market is responding to. So don't be surprised if this level push the market up and refuse to come to our extreme order block, because order flow is more stronger than order block. So, and you can see this level, but if this level fail, then maybe market will come to this level. If this level fail like this, then maybe market will reject. And if this also fail, then it means that we're expecting this low to be weak, because looking at it, this is just like a liquidity. So market can trade below this level. And once this low get weak, then it means that this daily is also going to be weak, because markets can easily change character based on that. So let's see if you can have a clearer 4H setup for us in this same context. Let's see what 4H is doing. Sorry. Let's see what 4H is doing. This is not responding. Okay, it's fine. So let's see what 4H is doing. And see, I want to clear this level and see what 4H is actually doing for me. So, and in terms of 4H, you can see that immediately we mitigate. One thing is, once you mitigate the higher time frame POI, you don't have business with what the market was doing before until you get to that level. You can just look at it and see how market got to that level. But what really matters to you is this level has been mitigated and what the market is doing next after mitigation of this level. So in terms of 4H, you can see this where our change of character is fall, and then where is our inducement in terms of 4H, because now we are looking to buy for bullish momentum. So where is our inducement? Our inducement is here. There's no valid pullback here. So we had our inducement here. So you see why is likely for that level to fail or for market to push up or to push down. So if you are to look for it, you can see there is no valid pullback. There's no valid other block here. It's only if market want to sweep this inducement and mitigate this Indian POI and push up. So, but for now, I would say you wait for probably 1H is um a bit straightforward. You can wait for 1H. Allow this structure to be complete. Allow this structure to complete, break above here to confirm maybe this low. Then market will protect this low. Then if you have inducement, then you wait for kind of extreme. Then you can start buying to the upside. So, but you have to think in probability. Market can push up, create this high, and also create low, and start selling from there. So those are the things that is likely going to happen. So that's it for good. So and I think we are okay for now. So this will be the end of this video. If you have any question, you can drop it in the comment section. And probably if you also have any pairs that you want us to be looking at, starting from next week, you can also keep dropping your pairs so that we just include it and do general analysis on it. So bye for now. See you in the next video.